Oh, you guys can't hear me at all. Damn it. That's okay. I said 1 second. Just give me 1 second. I'm just putting the chat on this screen. There we go. There's a little bit of a lag, so I know that you guys can hear me now. Okay. Bear with me. All right, what's up? Let me move this now so you don't see the back of my head. Okay. Hold on. Shit. Super rusty. I just lost the chat. And here we go. Okay, what's going on, guys? You guys can hear me nice and clearly now, I'm assuming. I'll give everyone a minute or two. Settle in. Cornholio, Brian, TJ, Keld, Donald, Dave, what's up, man? Max, Banks, what's up, buddy? Luna, Unpumped Gems, Freak, Jean, Donald, again, Cornholio, what's up, guys? So, thank you guys for hopping in. Yeah, Frey is, she's chilling. That's Freya right there, right? Say hi. Okay. Nice camera angle, thank you. What truck do you use to pull the horsies? An F-150. So we actually just bought a brand new F-150. The 2022 Limited, like top of the line. White with like a dark leather inside that's kind of like a navy, almost a black, and it's got like the diamond stitching, all this stuff that my wife wanted, and because of that, none of that was available. There were like 3 trucks that were available close to where we are, so we're waiting for that to get built. But yeah, we use an F-150. I have matcha tea, matcha and green tea. Adrian, what's up, buddy? Kurt. Okay, so we'll get it started in a minute. Thank you guys for tuning in. So for anyone who is new, because it has been a while, and as Dave said, got the Blockroots count back. So for any of you who stream, you already know that YouTube, they made it a requirement that you have a 2-factor authentication on your YouTube if you're a content creator. And the last time I went to go do a stream, I realized that. And again, to reintroduce myself, my name is Ryan, also known as Canteringclark on Twitter. And myself and Josh Rager are the co-founders of Blockroots. So the Blockroots YouTube, he originally created it, and it only has 1 phone on file. So it was a matter of like me coordinating with him. You know, we're separated geographically. And by some time. So I wasn't really sure, you know, what he was doing. I didn't want to bother him like last minute and tell him to, hey, tell me the code on your phone right now. I'm trying to log into YouTube. So I actually figured it out. I added my phone number to the account. So yeah, got it back. All right, and I think it's about 1:10 right now. So we'll get it started. So just to reintroduce myself, my name is Ryan, also known as Canteringclark. I'm a co-founder with Josh Rager of Blockroots. I know I just said that, but Blockroots is primarily, we have a market profile and order flow course. There is a Discord community, but we're not like in there giving signals or anything like that. I've been trading now for going on, I can't remember if it's 14 or 15 years. I'm pretty old. Went through a lot of the same things that you guys are going through. And hopefully I'll be able to offer you some, let's say, signal in the noise and non-sensational crypto market analysis with a focus primarily on lower time frame trading. And I'll get into what I mean by lower time frame trading because I just mean intraday trading. Intraday trading. No, this is a Ever Rose Gold, what's it called? GMT, but it's a root beer. It's the limited edition root beer. But yeah, I haven't streamed in a while, so I might be a little rusty. A lot of ums, a lot of ehs, a lot of yes. But we'll get it started. So just as a reminder, none of this is to be taken as financial advice. This is for entertainment purposes only. Just giving you my interpretation of things, and that's it. And like I said, I'm a low time frame primarily trader. I have a generalist approach in the sense that I'm trying to also take advantage of the larger swings within the market. I have spot exposure. Right now I don't have spot exposure. It doesn't mean that I don't have any spot exposure to anything in the market. I still have positions that I just think are going to take longer to play out, and they're small enough to where they don't have the same degree of correlation as your majors do. So one of them that's done really well the last couple of days is Maple Finance. So I just checked that today, and it's up considerably. And whenever I say things like I said yesterday, losing 58, getting rid of my spot positions, getting into USD. This is with regards mostly to things like BTC, ETH, and the majors. Okay. So that's what I mean by that. But when I say my trading is mostly lower time frame, I can be scalping positions anywhere from a few minutes to a few hours. I say I am mostly an intraday trader. Now, there's nothing special when it comes to why I am. It's not like I've really identified that that's where my edge is. I think it definitely is, but it's primarily because I think it just better suits my lifestyle. Honestly, I got to a point, and I think it was, it was in my early 30s where I was like, I don't like going to bed on positions anymore. I could do spot positions, but when I'm talking about things on Twitter, and I'm talking about my opinion on, X, Y, and Z coin, that is going to be 99% of the time I'm talking about taking futures positions. So talking about opening up, a swap position. And that also, for the most part, that mostly applies to alts as well. And I'm trading the perps on alts. It's not me constantly talking about, how I am trading my spot positioning. These are futures trades. Like I said, 99% of the time. And I find that I just can't comfortably go to bed anymore on positions, on futures positions. It's just, listen, whatever floats your boat, right? I find that I would be, even if I was extremely confident in a position, and it's something that was, if I'm sleeping on it, it's a swing. Even if it's something where I have like a clear invalidation and I have a stop, I just find that like I would be in my bed, it would be and then it would be past midnight, and I'd roll over, I'd have a sip of water, and I'd look at my phone, and then I'd be like, okay, I'll set an alert, and then I'd think like I'd wake up like an hour later, and I'd think like, well, I should check it anyway to see if it's close to the alert, and I'd check. And then I'd start thinking, well, if the alert goes off, it already means it's too late. So what I need to do is I need to set an alert before the actual alert gets hit, so that just in case I'll get up and make adjustments. And then I was thinking, well, I have a laptop. Why don't I just sleep with my laptop right on my nightstand? Just really poor habits. And honestly, it hasn't hurt my bottom line whatsoever to try to do away with that as much as possible. There are many times when I do sleep with positions on, okay, but it's usually when the market has a lot of energy. There's a ton of momentum in the market, and it just has to be really dictated by conditions. As of lately, it hasn't been that way. All right. So that is what I mean. My voice almost cracked. So that's what I mean by that. All right, so let's get into it. Does anyone have any questions offhand? How are we feeling? Are we bullish? Are we bearish? So I have to do these streams more, and I don't get paid to stream. I don't know, find that sometimes I go through periods where I'm like on and off with it. I get really into it, and then I'm like, I fucking hate streaming. And then I think, well, let me do a stream. And then I do one, and I'm thinking I really like streaming. I can fit it into my schedule. So I'm going to try my best to do more public streams. Before we get into anything, you guys know that any platform or program I use, feel free to ask me. I could see that some of you are asking what I use. Links are below for the exchanges. You know that we are partners with Phemex. So we've been partners with Phemex for the last 2 years. It's not like we just have a ref link. We are legitimately partners with them. We've been on the core team now for again, I think going on or around 2 years, whatever. Great team. So be sure to check them out. And yeah. All right, so let's get into it. How are we feeling? Bullish, bearish? Let's switch over to the chart. We're going to talk about BTC. We're going to talk about ETH, Solana. What else do we have? Loop ring, some meta stuff, my opinions on the high time frame, and the low time frames as well. Bullish, bearish, what are we thinking? Let me just go back through the chat. Can your Razer laptop handle all your trading needs? Yeah, I have a PC. I think you guys can see part of it. So I have this vertical monitor right here. So my setup is vertical monitor. It's an Asus. I think it is a 30 or a 27 inch. And I have that, you could turn this horizontal, but I have this split vertical, and then I have two Asuses that they're definitely a little bit bigger than this. So they are probably 32, 35 maybe. And then across in front, I have I think it's a 49. I think it's 49 inches. It's I keep forgetting. It's a Samsung Genesis, I think. And the laptop, this is a Razer, top of the line Razer touchscreen. Can't even remember exactly which one it is. My buddy Stan, a while back, I was looking for a laptop, and I just asked the crowd, and my buddy Stan recommended this, so I bought it instantly. And yeah, it's a gaming laptop, so it absolutely can handle any kind of platform I'm running. I have this open and always, so I trade one specific exchange through this laptop. I don't trade on that exchange on anything else. And I have it so that this computer cannot connect to the internet unless it's going through a VPN. So it is, what's it called? It is, I can't think of the word right now, where it's dead if the VPN disconnects, no internet access. So I usually have this open, and I have that mouse right here. I could switch. So the system I'm running for my mouse is Logitech MX Master 3. This is awesome. And then this is a Razer. I could actually use this if I wanted to click on and off, but I've become ambidextrous with my mouse use so that I don't have to worry about pressing that button, just in case things are crazy. I need to be able to act quickly. I'm just going through some more of these. Yeah, I would not advise anybody trade futures unless they have spot to the T. Risk management. Um, when it comes to risk management, I think position sizing is one of the most important things. So you need to be able to take a lot of losses, right? You absolutely need to be able to take a lot of losses. So if you lose all your chips, it's game over, okay? And if you're a great trader, you might be right 50% of the time. So that obviously implies you're losing a lot. You need to size your positions correctly and make sure that you can go through streaks where you are on a losing streak, because you're going to experience that. So that's one of the most important things, other than like the, stuff that's always emphasized, which is like, have a clear invalidation for the trade. It might be a structural invalidation. It might be a volatility-based invalidation. Might be a time-based invalidation. There are a lot of things that are repeated that are geared towards new traders that as you become a better trader, you'll realize they're actually not best practices. So, for example, you hear, and this is like something that I think is repeated too often, it's like only risk 1% or 2% per trade and just treat every single trade the same. Well, that doesn't make a lot of sense, because as you develop as a trader, you are, and for anyone who's new to this YouTube, everyone knows that I go on like these long things in the beginning. Hopefully they're not too much of a tangent, but I'm just answering some of the questions. This will probably be a pretty long stream. One of the things that's repeated is like, oh, you should only risk 1 to 2% per trade. That doesn't make any sense though, because not every trade is created equal. So ideally, you'll know what your better edges are, right? Or where most of your edge is, or what your edge is, period, and what are your higher probability setups. And if you have, setup A that is, something that is some, almost a guaranteed positive outcome, and you have another one that is like, this is 30% of the time this resolves favorably. Well, wouldn't it make sense logically to go in heavier when you are more confident, right? So dynamic sizing, and then you can get into like Kelly criteria and stuff also. I'm sitting playing with my Twizzler. So position sizing is very important. Having a clear invalidation. So my Aggr template, for anyone who messages me on, okay. Belief bounce, short-term bullish, neutral, feels like leverage washout. Yeah, it was a leverage washout because there was a lot of leverage in the market, but I don't think it's required that it always washes out. I just think at some point it becomes obvious to smarter players that the market is kind of gassed, and if they get the ball rolling in the opposite direction, they could really push the market around easily. So it's a kill switch. Thank you. Yes. So there was a pretty obvious spot seller coming through. Yeah, shout out Stan. Coming through Bitfinex for the last 72 hours up until recently, where it kind of tapered off a little bit. Yeah, high conviction plays should be sized differently for sure. All right, so let's take a look at the chart really quick on the high time frame. And I have a few things that are set up right now where you can see I'll rotate through them. So we have the tapes, CVDs, and liquidations. I have Bookmap, which is something that I've recently integrated. I was talking with the team. They would really, they mentioned to me that they would like to work with me. I said I could only add this if it is something that still offers the sort of order flow feedback that I am currently looking at either way. And this is just packaged differently, but it's showing me basically the spot activity that I would normally be looking for in the tape. I can see that highlighted by these large volume orbs or whatever they are. And I also have an aggregated heat map for spot exchanges. So basically I'm looking at how depth changes. And importantly, when we approach levels, because people look at heat maps and they think they're like magic, but really they're just advertisements. It doesn't cost anything to place an order in the order book. I want to see when we get to those levels, more importantly, to confirm whether or not we're actually trading with them. So does that large, if we're all looking at like a major bid wall, and we're thousands of dollars away from it. That doesn't really mean anything. Like when we get there, you'll see real quick that those will be yanked. So I want to know whether or not the counterparties in this case have the intention of getting filled, because that obviously can, it doesn't just mean like, all right, price has to go up. But if we're seeing demand and that demand is actually being traded into, all right, well, usually the limit order book or the limit players are the ones that are heavier hand and are going to be shaping the market, whereas the aggressors are going to be taking it from point A to point B. But the limit order book, the limits, the passive activity is usually going to be what's going to create the confines that the market is stuck between. So that is Bookmap, and then the vertical monitor is where I have, let's see, I'm making sure I have this set up right because it's vertical, but I split it so it could appear on the screen. We have a few things right now. I have BTC, Footprint, TPO, and then you'll also see I have ETH as well. Market's moving a little slower right now, so I have it on a time-based setting. So I have it on a 15-minute candle. I'll use like a 5, 15, 10. If the market's slow, I'll have it on a time-based setting. If the market's moving fast and I'm actively trading the low time frames and I'm scalping, then I'll put it on some type of volatility or volume-based periodicity. Something like a trend reversal candle or a tick-based rotation. So, a candle gets printed if we move outside of this range. Or a candle gets printed if we trade, a candle gets printed for every 500 trades that come through. That's when the market obviously has a little bit of legs and a little bit of speed behind it. So, and then we're also going to be looking at, I think that's it. So we have center, top two screens, left, and then just the chart. Thinking in Bets is one of the best books. Annie Duke, poker player. I don't know if it's free. I'm not sure if it's free. Let's get into the charts though. Okay. So let's look at BTC first. So right now I am getting filled on a Bitcoin short and getting filled on an ETH short still. And I have orders for ETH all the way up to, I think, just over 43.50. Now, just looking at the higher time frame first. Okay, so previous all-time high. Let's make sure my drawing tools are on. Okay, previous all-time high, new all-time high. We have a series of high, low, higher lows. Okay, so on the high time frame, nothing has changed with the chart. So I'm not bearish whatsoever when it comes to the longer term secular trend. I think that it's just an asset now, like a normal like it's just going to trade like the indices. Think of the S&P 500. S&P 500 traders don't wake up every day and think about if the S&P is going to 5,500, right? They don't think, all right, well, now that it's gone up, it's going to 55, and now that it's gone down, considerably, it's going to 25. They don't extrapolate out and think in like diametric opposites when it comes to direction. I think BTC is going to go up over time because it's a new asset class. It's very infrequent. There's only been, so many asset classes, and the birth of an asset class, if you're within 15 years of that, you're early. So I think you're going to get trickle-in effects just from new generations saying, oh, I like digital things more than stones and metals and things like that, right? I'm taking my parents' portfolio that I'm inheriting, and Dad had gold, but Bitcoin is the new digital gold. Okay, so just passive allocation alone, as more traditional legacy market participants have access to crypto, they don't think of it in the same exciting way as people do within crypto. They don't think like, I wonder what crypto's doing today. They just think, okay, well, I have a portfolio. We have to get a little bit of this satisfied. We need a little bit of exposure to digital assets. Let's throw 1% at it. We'll rebalance it as it, overperforms. Okay, so they're just passively throwing 1% at crypto, and they're not thinking about it the way that you and I are. And 1% for them if they're like a sovereign wealth fund, or if they're a pension fund, or if they're, you know, a long only asset manager, 1% is a fucking huge amount of money. And this for them is just, well, we're checking off a box now. All right. So I think over time, you know, the secular trend is going to be up. Long-term asset prices tend to trend upward. And, you know, part of that is due to inflation. Okay. The equity indices, for example, the internal components. You have companies that when they are experiencing the same issues that, you know, you and I are experiencing at the store, what are they going to do? Well, odds are they're probably going to raise their prices and pass that on to the consumer. And then that's going to be, you know, there's an argument for that being reflected in stock prices. So I think the trend is obviously from a technical standpoint, it's intact. I think over time, it's just going to rise regardless. It's a 100 vol asset that has a 200% compound annual growth rate. So the more important factor, the more important feature of that is that it's a 100 vol asset, right? So volatility is a feature, it's not a bug. So from a technical standpoint, this is, you know, this is a retest of a prior resistance. It's a messy one, okay? And I think moving forward, we could expect things to trade a little bit more messy, right? Alts have been trading very clean. They're more retail dominated. It's not the same asset anymore. As this continues to mature, it's not going to be what it was in 2017, 2018. I don't think we could all just be like TA experts and say, oh, this retest has to be, you know, we have to stay above this level. I do think, though, that when we lose levels, it's more likely that we get deeper retraces. I just think what happens is you do send a signal to a fair amount of the market that does influence flows, and you're going to get deeper corrections. And like I said, you know, you're not going to get the cleanest retest with something like BTC. So for me, you know, when 58 was lost, I said, okay, that's it. Like, because I don't know, and there's been so many times before where BTC loses a level and everyone's way too complacent and forgets that the same energy that helps it move up a lot more than we expect also helps it move back in the opposite direction, right? It's extremely reflexive. And it's the concept of price equals value. So higher prices beget higher prices for Bitcoin, lower prices beget lower prices, okay? So as far as where we sit right now, we're looking for a higher low, okay? The point is it can come between here. We'll go over the criteria momentarily as to what I am looking for. So weekly structure looks good. If you look at ETH, it's even better. ETH did this before in the original breakdown though, right? So ETH weekly structure, retesting, topside. ETH overthrows BTC though, right? So if ETH is a ball and BTC is a ball, and we have the same amount of people behind it, right? ETH is a tennis ball, Bitcoin is a ball of tungsten, right? If you throw them up in the air, one's gonna go further than the other. In this case, ETH had the benefit of being overthrown, or rather overthrowing. And yes, it's sitting above this level. This is cleaner right now. You know, same thing happened going back. This was, let's go all the way back to May. Previous top side of the structure. ETH had a clean retest of that level too. So we're talking about, let me just, because it's getting a little wonky right now without, here we go. On the way up, this consolidation, right? ETH came back down, had a clean retest where it looked like it might have been something that would have easily cascaded through. Over time, we saw that it behaved like assets do when they have major corrections. They need to go through a longer consolidation period. So for BTC on the daily, so let's just put I have them on the other chart, so maybe we'll just go to this screen. Daily, weekly levels right now. So weekly is right around 57,874. So from the prior range, we can't do that because I gotta get rid of this profile. Weekly level 57,855. Excuse me. Daily level, which is same, right? So this daily low right here. But I don't want to get too attached to a line in the sand like that. Most importantly, I think between that level and right around 60K, this was a prior demand zone. I would expect this to act as resistance now. And ideally, we trade back above 60, right? I think if you trade back above 60 and you find your footing back above 60, then you have more of a case to return back to these highs right around 66 and previous all-time high. And obviously, if I think the trend's going up over time, I think it's going to get there anyway. But like I said, I'm talking about trading. So right now we lost major structure. Again, key level for buyers we're going on from the end of October to the beginning of May. Retest of previous all-time high, this prior range, unsuccessfully holding it. Is a possibility. And on the way up, we talked about this level not being built as substantially as you would want it to be built, right? So not much of a base. So it's a possibility that the underside retest of the structure continues a little bit lower and we test out around 53, maybe 50, maybe 49, who knows? But the point is, who knows? All right, so I'm not going to sit here and say like, it's definitely going to 53, it's definitely not going to 49. Like, who knows? When this thing gets moving, until you have massive spike where spreads blow out and we get a ton of liquidations, it's very dangerous to assume a bottom. That's why I would rather be buying higher. I would rather always buy higher than try to knife catch. If I'm knife catching, what I'll typically do is I'm scalping, right? So I'll get involved at a key level that I think will offer a short-term response, but in the long term might not be sufficient to expect a bottom to develop. So the underside of this previous range right now, I would expect it to act as resistance. I mean, honestly, if we go down to, if we look at, we'll go to the lower time frame, put on the profiles. One sec. Just pop the chat out too. Okay. So this entire move was not, it was not just, it's kind of stupid to always be like, oh, it's all the leverage in the market. This was a very forceful seller coming through Bitfinex. All right, so was operating using a time-weighted average price sell program. So basically just think of that as selling in intervals. It could be dynamic where it responds to levels of liquidity because that's, it basically seemed like that. If you looked at the progress on the way down into this range, when you look at it on a 1 hour chart, you realize how silly it is to try to knife catch. Okay, the entire way down, this was just a one-way trip. And basically what was happening was market was selling off, spot was pushing lower. It would look like there was a relief rally in the making, maybe a short-term bottom. The minute that the bid repopulated and it seemed like we had a bid, that sell program just got going again. So this is a very smart seller. This is not someone who was just indiscriminately selling and panicking. This is someone who was waiting for liquidity to show up, selling again, selling continuously, pushing the market lower. Didn't matter if Coinbase was trading at a premium. It didn't matter if Bybit was trading below. This seller was very one-sided, and you could see it on a tape. So if you have a CVD that was specifically for Bitfinex, so let me just pull this out. So you can see that this white CVD right here, that's Bitfinex. So cumulative volume delta, this is the running total of aggressive activity at the bid and at the offer. So market sells and market buys. All right. And these are the separated tapes. So basically, I had separated my Bitfinex tape when it became apparent that it was Bitfinex that was doing most of the work. So what I mean by that is this is an aggregated spot tape right here where I'm paying attention to overall flows within the market. Just very simply think about it like this. If the market likes a level, you'll see a lot of participation, right? Coming through a level, breaking through a significant support or resistance, you want to see that not only is there a lot of participation, but the participation that's coming in is leading to results. So, when you're looking at the tape, it's a lot of nuance to it, but one of the things you'd be looking for is, say, for example, this level right now that we're testing, which is right around 53.8, a lot of selling, a lot of buying coming in if there's a lot of buying coming in, prices no longer moving up and prices beginning to range, well, the tape activity is probably, it's getting stifled for a reason, right? There's someone passively absorbing that activity. So there's a lot of nuance to observing the tape. Basically, you're just looking at buyer and seller interest. How interested are they in participating, depending on where the market is. So right now, what we had was we had a perp lead off of the lows. So let me just clarify one thing real quick. I noticed the Bitfinex seller. A lot of people noticed it in the market as well, right? So if you're on Twitter, there's people that are pretty vocal about this. I ended up separating the tape. So separated a tape that's only for Bitfinex, put that on my vertical screen, and basically was looking at that to see when that activity was picking up or slowing down. So this activity off the low, so we had trend day off the highs, okay, big splash down from all-time high. Sellers present the entire time. There's no special reason why I knew the market was going to put in some type of 2 to 3 day range. It's just statistically speaking, after a very significant move, that's what we're looking for. So that's why I said, have fun trading the extremes of this structure. So now we've had a break from this bounce, right? Acceptance lower. We have a trend day down, and now we have a trend day up. So it's not like the market is consolidated down here. We have a trend day up instead. Now, this trend day up, I would not say is it's not a reversal. I'm hanging my hat on that. After a big move down like this, the market does not just V-reverse unless there's some type of catalyst, right? So, you saw the announcement today, someone from the Fed saying that Bitcoin is digital, basically digital gold. So that's really great, but the market is not ripping because of that. A V-reversal is going to happen when you have a ton of shorts trapped at the lows, or if there's some kind of, very significant news catalyst, right, that's not priced in. We have neither of those right now. It's not really a question of it right now because you see that the market is not continuing to rip up. So we have a downtrend over the last couple of days, and the market is moving counter trend right now because what happens? People who are short, they take profit. When they take profit, they buy back. So what we see in this move right here is a trend day up. Each one of these moves up is coincided with a drop in open interest. So what's happening is shorts are covering. Shorts are covering, but to make a bottom, seller has to be done selling, right? It's not like we're just looking at buyers overpowering at this point because we had this sort of, it's not exogenous, but we had this very obvious seller coming through Bitfinex. So it's not going to just reverse in a day. I would fully anticipate that even if this is the bottom, it takes a couple days, right? You would expect the market to range, juke out both sides of the market, make them think of immediate continuation, and it's a market maker game at that point. And getting participants off sides is something that we see is quite popular with BTC and just assets in general, right? So right now, I think that this is primarily a short squeeze. I think the more important detail is that if you look at where we're coming back into right now vertically, it's higher time frame resistance now, right? So weekly level, daily level, this entire structure at the high, it was from 64 to 60 where most of our composite had developed. So it's not just a line in the sand. It's the idea that now we're losing the underside of the structure. You have something like this where you have most of the activity stuck within this range, takes out the lows, takes out the highs, and now has broken through one side of the market or one side of this structure. I talk about this pattern all the time. If you have a range put in, okay, expect both sides of this to be tapped, right? So your high, your low. If both sides are tapped, if it's this, and then the market continues up or breaks to the upside, or if it's this, and then the market continues down and breaks to the downside, I do not fade that final break in acceptance. Because at this point, you've already taken the low, taken the high, and you're continuing. That actually wasn't the exact drawing. We're looking at high, low, and then you've taken a low, taking the high, and then you're picking a side. So after taking the low, after taking the high, what side is the market being accepted in? Or where is the market being accepted? Is it at the high or the low? And at that point, I'm not fading. So just to give you a hypothetical to the upside, market took the low, took the high, and now if we're reaccepted at this high, am I fading this high a second time around expecting that there's going to be a stop run up there? No. Now after we've run both sides, I expect that the direction of the market does take, if anything, just imagine this, it's just worth taking seriously. Breaks in market structure are always worth taking seriously. Even if we're buying higher because this time around, it happened to be that we had something that was unexpected occur, and we have some V reversal, that just goes back to the risk management conversation where, hey, markets are full of variance, right? Sometimes that one thing that's very unexpected happens. And if anything, often it does happen, right? So for BTC, right now we're coming back into some pretty important levels. Higher time frame market structure, underside of this composite. This is occurring on a short squeeze. We're into the anchored VWAP from this high, and we have the weekly VWAP, weekly VWAP around 60,200. I think that what ultimately you could expect, because right now you have, if we look at just the CVDs, post this high, so I'll change the color of drawing tool, post this high, so from this is from here where 17 is. Let me just line these up so it's a little bit better. Okay. All right, zoom out. All right, so post high into that higher time frame resistance. What do we see happening with inflows, right? So perps led the way on the way up, and now because we're at a key technical level, and this is why I have bids further up, they're selling this most obvious level. So you see the future CVD trending down, whereas the spot CVD and the Bitfinex CVD are trending up. So, I mean, if we just look at Bybit and Coinbase prices, for example, you could see that here is Coinbase, here's Bybit. Coinbase is trading at like a $68 premium to Bybit, so it's trading above. So right now, people are fading this level. So I don't think that means that it's going to continue all the way up and it's disbelief. I think it's logically the next area to fade if you trade, just from a structural standpoint. So this is getting faded. So what ultimately I think would happen is what we see happen often is when you get a lot of size coming into the market and you have this kind of divergence between the spot and the futures activity, will probably punish these people who are shorting just right here, not expecting that price might wick further up. So could price wick further up into this weekly, we're looking at around the weekly VWAP? Absolutely. But it still could ultimately lead us with, I have to change the screen again, one sec. So this is all right, let's do this again. Bear with me. I don't know how that just happened. Okay. So where was I? Okay, so I was mentioning this, but you guys, oh, damn, the fucking drawing tool does that. Excuse my language. Though. All right. I have to tap out of this and then press the drawing tool hotkey. All right, let's do that again. Okay. Good. Is it good? Hold on. All right, let's do that again. And we're good. Anchored VWAP, right around 58.3. Weekly VWAP, right around 60,000. So could we get an overthrow just from pushing, trying to push these shorts that are fading this out of position? Absolutely. But I think your higher time frame evidence is trumping your lower time frame evidence either way. So what I think is happening right now is also people that are redeploying are buying back into spot, but I don't think it's ultimate. What I expect to happen is, regardless of whether or not we bottom here, that price does what it does 90% of the time when it bottoms. It doesn't just review reversal. We go on to create a multi-day sort of inside structure. So what we might have happen down here is similar to what we had happen up here, right? So we might have something where we have, this composite and another composite form down here. And best case scenario, for, I guess, confidence in longs would be, let's say we fade off of this level, trade back down to the lows, take out the low, which I think is likely to happen, and then we're back above 58K. And then I think you have some great trades ahead, because you've taken out these stops, and you're probably looking at this naked point of control right around 59.7, and more often than not you're going to take out previous highs. But if we come up here right now, I think it's going to be a lower high, and I still think we're going to float lower. And there's a few reasons to think that happens, and one of them is this kind of drastic activity where we've broken after a very strong spot seller. We've broken below significant market structure. I think you could expect that it's going to take some time for this to work out. I don't mean months or anything like that. I mean maybe a week. Does this all make sense for BTC? So put it this way. This right now is an area where there's probably a lot of people buying this because it's a dip. But I can't tell you how many times you end up zooming out and realizing after, oh, Jesus, I just bought the first retest of the most obvious resistance to sell. So when it comes to higher time frame levels like this, I think it's always just best for me to have a best practice that I apply regardless of my feelings. So when it's higher time frame levels, I don't really, I don't try to get smart with the market, put it that way. This all makes sense? So we have a short squeeze off of the lows. Now we have shorts fading this, so we might squeeze a little bit more of them, but I don't think it's going to change the fact that we have a few reasons to revisit the lows, because one, there's no catalyst. So I think ETH is a little bit more obvious. Hold on one sec. See if there's anything else I wanted to. I want to go over my mistakes yesterday. But let's take a look at ETH. So right now, just another example of something to look at. ETH, Coinbase, ETH Perp. ETH is spot trading at a premium right now. So again, this is, I think, right. Wait one sec. Actually, I have an ETH chart set up for this. All right. ETH has more overthrow, right? ETH is higher beta. This has been the way that ETH and BTC have behaved now for the last year. ETH outperforms Bitcoin, right? It might go through periods where it doesn't outperform BTC, but it outperforms Bitcoin when you zoom out, right? Most alts outperform Bitcoin. I don't think that that's really any debate anymore. So I started shorting ETH around this point of control. So we're looking at right around 4250. And I have shorts that are going all the way up to these highs. I think ETH for me is a little bit more obvious. All right, so if we look at ETH and we look at it on the daily, we're back above. So this was prior daily support. ETH held its previous levels, so previous weekly and daily levels. Like I said, I could see us taking out this high though. It's not so much that I think it's worth fading this resistance, because as you can tell, I said that I had bids higher, so I was anticipating us coming further up. If we just look at we'll look at the, where is it? ETPO. Okay, if you guys can see this. And while we're on the screen, we'll point out, the very obvious fading activity that's taking place on ETH and BTC. Here's the last 2 days, right? So we had balance, market. Oh, what the fuck? Here we go. Open, break above, take highs, trend day down. And again, with ETH, similar to BTC, trend day up, right? The market will, more often than not, impulse, consolidate. It won't typically impulse back in the other direction, like I said, unless there's some kind of major catalyst. And this is not the price action that usually looks like anyway. This is a trend day, a trend day down, a methodical trend day up, right? But if you look at it on the low time frames, we'll go back to that screen in a second. We'll do it right now. This is, I did the drawing thing again. Wouldn't be a Clark stream. I don't know why I referred to myself as in the third person, because that's not even my name. It wouldn't be one of my streams if I didn't have constant mistakes being made. All right, let's do this correct again. So big impulse up, tight base, big impulse up, even tighter base, smaller impulse up. So 1 move, 2 move, 3 moves, getting tighter. What this usually sets up is your final thrust, and then a very quick move to the downside after that. But going back to the vertical chart, not as rusty as I thought I would be. More importantly, what I am focused on is these two details right here. Let me move this in your screen. So what we have right here are 2 poor lows. So when you're looking at a TPO chart, where is the market being accepted? Where is it being rejected? If you look at something like this, market was rejected here. Didn't spend a lot of time there because this is all based on time. Thin areas, market wasn't accepted here. Oh, this was very accepting of activity. We spent a lot of time there. So when you're looking for a bottom to form, you want to see that, I always go to like the iPhone reference or anything that's like a scarce resource, right? If there's only a few of them and it's something that's so worth owning, it shouldn't spend a very long amount of time on sale, right? So we should see that the market wasn't able to spend much time down here. What you're looking for is a buying tail, which would be a TPO that looks like that, right? Now, 1 day alone is cause to keep that in mind, right? Okay, this is an area where we might have a stop run, we might have a breakdown. Either way, there's just a high probability that we revisit this area. And it doesn't always have to mean that, right? There can be these like exogenous factors that are, Fed announcement or something relating to BTC or ETH directly, and the market rips up. Like, there's no reason we have to revisit this area, right? But for 1 day alone, you'd be thinking that. Okay, all right. So I'm looking at my TPO chart. We have a trend day. If we look at the last 2 days, they're within balance. So we have an inside day structure forming inside. Okay, market opened up inside of this range. We have a poor low. So that'd be an area where I would expect maybe a stop run to occur. Even more so now because 2 days with kind of equal lows and definitely a poor low now when you combine them. So even lows like this without any kind of major rejection, and this one's slightly higher, which is even more telling. So it's not like this low. It's not like this closed. What's going on? Why is my drawing tool? Why am I stuck in this thing now? Hold on. Oh, it's going to piss me off. Wait 1 sec. All right, there we go. It's not like we closed here and then this opened the way you would want it to see it open, right? Market opens, takes the lows, and then rips up in the opposite direction. Instead, it was a one-sided open. Market opened, just moved up basically. Hold on, I'm trying to get this expanded. Come on, what's going on with this shit? Fucking XO, great platform. Either way, so we have equal lows, but today is a slightly higher low. I am putting money on it. I'm putting a significant amount on it that we return back to these lows and develop some type of longer term balance and consolidation. Does that make sense for ETH? again, if we look at, so I'll go to, oh no, it's the bottom one. So it'll be on your right screen. So here's ETH, right? On the way up, we're looking at, here's Bybit. Bybit is where you're seeing right now your negative funding. So look what happened on Bybit. You're looking at an ETH footprint on Bybit, which is where the apes operate. And at the highs, you have sellers just selling the highs aggressively. So 2.1 million contracts at the high there, open interest going up, selling the highs again. So pretty incomplete. I mean, you have a completed auction right here. So what this 0 means is that market never went bid right there. So that doesn't really matter much when you look at the structure to the left and the right, which was, it's clearly sold into. So aggressive selling of these highs, right? So fading these highs aggressively. Smaller, usually you think of the weaker hand as being the aggressor. And more importantly, as that's happening, what that means, the fact that this area was able to stay and the market was able to sell into that area was able to be sold into, that means that on the way up, the bid was staying stacked right there. So the bid followed this up. When you are looking for like a high or a low to form, typically what you're going to see is the market is going to come to a point, move up, where buyers are no longer willing to bid higher prices. So just think of it as, it's a basic auction market theory stuff. We're going to raise the price until the volume in the room no longer picks up, until buyers are no longer to, bid on the whatever we're talking about. So think about the bid and the ask very much like that. Okay, so we're still seeing that buyers are willing to bid these higher prices with ETH. And aggressive sellers are coming in. So I think we probably just squeeze them out and then start moving back down to the low. Let me just look at the chat. Oh, thanks, Josh. Let's see. I mean, log chart is Bitcoin, Ether, logarithmically growing assets. It'll affect you if you're drawing diagonal trend lines. When I'm trading, right now it's on log because I was looking at the high time frame before. I just leave it on just regular setting, regular scale. Okay. So Solana, I bought Solana's dip yesterday, so I shared that, right? I'm pretty sure that's on my Twitter. I bought Solana's dip just because it is always the fastest one off of the lows. And when Bitcoin looked like it was stabilizing a little bit, Solana started moving. So I bought that. I since closed it out, so I didn't capture the move all the way up. But I think that Solana, going back to something that I say that everyone should do is find out what does the best off of the lows. So go back, look at historical price action for when Bitcoin bottoms after the market has been crushed, and look at the alts that perform the strongest. And what you'll see is that over the last year, it's always been the same. Solana has been one of the strongest ones off of the lows. So it's a fast horse, and I would expect it to stay that way. So options closing, there was a significant amount of open interest. I think it was around 60 to 62. So we're below that right now. Okay, so Dave, what do you think? ETH spot perp CVD on Coinalyze. I don't know. Let me see. Oh, the song's on repeat. No one wanted to tell me that. Coinalyze. So you can see your negative funding right here too for BTC. So that's a good sign, right? High time frame wise, so just to be clear, there's no strict rules for me when it comes to when I'm going to get re-involved. There are definitely things that I want to see, but there's no, the market, it's not that things cannot show up earlier that would say to me, this goes back to the concept of higher probability setups. There are things that can really start to add up that would say to me, well, dude, you don't need to wait for 60 to buy. Now every seller has thrown everything but the kitchen sink at the market and it's not moving down. Well, one of those things is if the market continues to move sideways, like let's say it's right around here. Let's say the market finds a base above 55. It finds a base above 55, moves sideways, and what we see is that the open interest to market cap ratio goes up, and we see that funding is going more negative. Well, if the market is holding the lows and is even beginning to trend upward on the low time frame on like a 1 hour chart or half hour chart, well, it's probably going further up before it's going further down. So let me just go to ETH. And then we're looking at the spot versus perp CVD. Yeah, same thing that we see in BTC. So just to clarify for anyone who's not sure what Speedwagon's talking about, and I'm pretty sure that this is what he means. There's a big divergence right now between these advertisements are really annoying, aren't they? Big divergence right now between the spot CVD and the perp CVD. So spot CVD is always going to be slightly different. It's always going to have more of a positive skew overall. I was explaining this to my brother this morning, who was like, hey man, like I feel like I have a really good feel for when the market's going to turn. Where can I short? And I was like, dude, you got to really trade a lot more before you even consider that. Markets are, mechanically, they are more likely to be longed than they are short, right? Especially crypto. Like your first entrance into the market is what? You're not borrowing funds to come short crypto. It's long, right? The market the market is long in general. Flows are primarily long. And it doesn't mean like that. Let me clarify what I'm saying. It's natural. It's a natural long. So with spot, there's only one type of short. There's only one type of seller, right? There's no seller. So I'm rusty. So futures, because I'm forgetting to explain certain things. Futures have two types of sellers. A seller to close a position, to close a long, and a seller to open up a short. So that's two sellers that affect the CVD. The spot CVD is only opening to buy, opening to selling to close. All right. So the spot CVD is always going to have a different look than the perp CVD period. But this is an obvious divergence. So this is basically what I was we're picking up on by looking at funding, by looking at the footprint. You could see this selling of the highs. It's that as the market has come into this technical level, that's an obvious technical level, the first reaction was to sell it because it's the first retest of that level. So what you're seeing is buyers are buying through that, spot's buying, and the perps are fading. Now, if you look at the coin margined open interest, you can see that it's showing that there are shorts being opened, right? So on the way up, I wish I could get rid of this price thing. Hold on, can I move this up a little bit? Like I said with BTC, it's the same flow with BTC right now. On the way up, it was perp dominated. So you have spot, but you have the perps that are also doing a lot of the work. Once we got to that key level, things shifted. Spot continues to buy through, and you see that there's profit taking, all right, and there's shorts being squeezed with the drop in open interest. Nothing substantial yet. You see that as the market continues to move up, though, from that point on, CVD has a general trend of down, right? It's so slight, but it's enough of a divergence that it's obvious. Up, sideways, down. And as that's happening, open interest is going up. So what we can infer from that is that shorts are opening at the high and sellers are fading this. So that's this is all confirming the idea that we could very well have that spike up that probably gets a lot of people involved and then reverses on itself. Okay. Just going through the chat. Trying to stay fluid with transitioning the screens. You waking up? She's the best dog in the world. That's a fact. All right, let's see. Do you ever trade news events? Absolutely. If you could get in early enough to the right tweets or the right updates or announcements, absolutely. But trading news events for me is very systematic. I am in and I am out usually after a 2 to 3% move. But whenever it's news and I see the market responds, I'm probably going in very heavy. But I never hold on to those things. I just know that certain things are going to have a meaningful response in the short term and more often than not reverse on themselves unless they're major catalysts. It's not hard to determine what's a major catalyst. We're all aware what ones are very significant. Like a Elon Musk thing is major. Okay. No, I'm not. I mean, I'm sure there are new clearinghouses coming in. Okay. Any questions, guys? My invalidation for ETH is, so my furthest order is up to this high. So my invalidation is something where it's discretionary. I don't have like a very hard stop on this, and this is something that works for me and it's never been an issue. And, again, if you're newer, you're going to hear like, oh, you must have a stop that's this far. Like, no, I typically manually exit trades. So what this should do is it should work out very fast. So if I get filled on my last order, what I don't want to see is the market is finding support above this level. What I think likely happens is that we get something that makes 90% of new traders go, oh my God, this is coming all the way back up here. It wicks all the way up, and it's one of those things where it very quickly looks like one of these candles a few minutes after. So I have to give that room to breathe, and it's something that I'll be monitoring. What that means is that I'm leaving myself to being, run over by that, but I'm not risking, I'm not really at much of a risk. And for me, I think it's high probability enough to take. I mean, we could see that if we just go back many times before, ETH has post-breakdown overthrown its previous levels, right? So, if we look at going back here, even here, right? This actually spent some time above. So I could very well exit this trade and it still ends up right, but that's just trading, right? Like I said, that's just variance. But I don't think that's a likely outcome. I think that what's more likely is that as we move up, more and more people are like, oh man, like this is V reversing right here. I have to get in, and then they market buy, and that's where the market reverses. So Solana, again, versus BTC and versus ETH, very strong. So this is all really the evidence you need to, right here, excuse me, to be favoring Solana. I mean, if we look at where Solana came back to, same thing as ETH right now. Go to the weekly. Just making this the daily highs close. So Solana, again, alts are, and Solana is a bigger alt, but they respect technical levels. The first retest of a major technical level, I don't know, I'm not giving financial advice, remember, but I will always get involved regardless of how bearish I think things are. More often than not. I can't say always, but 90% of the time. Meaning, even if I think Bitcoin is coming down to 50K, and that could happen very soon, I'm still stepping in the way of this trade. All right, so key level, acted as support prior. We spent some time away from it, and we have a vertical retest of it. But I think you still have work to do, you know? Now we are, don't forget, like even, let's say the trend is changing. Bounces are to be expected, right? Let's say that we're going from a series of, you know, just this lower time frame. I mean, it's a daily, but you know, you can see what I'm pointing out, the trend moving down. You know, you would expect a lower high at some point. Markets don't just move straight down. So you're expecting a lower high, and maybe that ends up developing right around that 230, 220 area. So I would not be shorting Solana though. I used to do that when Solana was under $50. So look how that worked out. Loop ring. I mean, right now this actually looks pretty good because it's downward progress. Looks like it is kind of coming to a halt. Just this series of progress on the way down. Now you have acceptance above prior lows. This trend line is broken. Maybe a higher low forming somewhere back above 240, 230. And alts, I mean, if anything, what we've seen the last couple months is that there is a high degree of correlation still, but there are a lot of strong alts that they're holding their ground a lot better than they ever have in the past. Now, what you also notice is that every single time there's a major pullback, there's always one alt that completely shrugs it off. And this go around, it's AVAX. Let's go back to the so good question. What did I do wrong yesterday? Let's just go look at the trades that should have been taken yesterday. Okay. So I traded the range near flawlessly, fading extremes. I got involved a few times within the range. Not something I like to do, meaning this is our range. Well, hold on. Let me just change the tick setting of this for one. Did I have it backwards? Is this? No, there we go. Let me just change the tick setting so it's a little bit easier on my eyes. Give it 1 sec. Takes a second to adjust. All right. Okay, so here's our range. Basically had an inside day setup. So at the high and the low. I mean, this is tight enough to where it would be poor low combined as a composite either way. So I shorted back here. I shorted over here. I longed while we were within the range effectively. It was back here where I over traded. All right, so let's just extend this low forward. Or we'll put back on those daily and weekly levels. 1 sec. I've lost the ability to do this smoothly right now. Okay, there's that low, that daily level too. Now let's go back down to the low time frame. Okay, just change the color, make it a little bit bigger, bright red. All right. Okay, so if this was an inside day setup, even though it wasn't perfect, right? So we kind of wicked. I don't know if this was on all exchanges, but we wicked below, and this was on Coinbase. So right here, wicked below. Right, but inside day setup would be, here's a bigger day, here's the baby day, it's inside of this prior day. Your setup would be at the high and the low. Now what I said, and I traded on behalf of this too, and I took the short up here and I posted it on Twitter, position and everything. In this situation, post breakdown like this, with this type of major seller in the market, I was expecting this would be a fake out rather than look for continuation above here. So if I'm leaning to one side, I'm leaning to this being a failed acceptance above here and a re-acceptance back within this range, in which case you're just, it's kind of like a Dalton setup where you're playing the move back down to the bottom of the range. If I said that a little fast, excuse me. But this is an inside day setup by all means. So we failed at the high, so you're looking back down at the lows regardless. So where it got hairy was, we have it was, before the trend transpired this way, it was looking like, your second day with imbalance within this composite. So going back all the way back here. And now I realize you guys probably couldn't see that drawing of the inside day, which again wasn't perfect, but you're looking at this day within the prior and you're looking at triggers at the high and the low. So it's kind of like the market is balancing out and you're looking for a break from balance. In this case, I faded the breaks. It was here where things got a little bit ugly. So one of the most important things that you have to do is you have to let the evidence develop, right? So focusing on this low, which is the red line, right? So that's the prior day's low. If we have a composite, we faked out to the upside, fallen back within. If we're looking for acceptance, we're not just looking for the breakthrough, right? What normally happens, more often than not, and if we go to the extreme low, hold on one second, of the prior day, one sec. Okay, we weren't on it. This is the prior day's low right there. Okay, it was close to that prior range low, but it wasn't exact. Okay, here we go. You guys can see it clearly. 3-minute time frame. All right. Just a breakthrough is not acceptance, right? So, one sec. Sorry, the ink changed. I'm getting all screwed up now. Just a breakthrough is not acceptance. The market usually responds in a knee-jerk fashion. You have a range, price is ping-ponging between there. You can't see that because I'm out of screen. You have a range, price is ping-ponging through. We're looking for the breakout. Market breaks through. Oh my God, it's a breakout. We're going to short. We're going to sell. You see traps develop left and right? It's a choppy market. So what you need to do is see something develop. This is a sold and hold development, right? So the market broke down. You trap a bunch of shorts at the lows. The minute that this low breaks down and we see a ton of selling activity come in, the minute you start trading above that, it's usually going to lead to a short-term reversal. So a lot of the times this presents very short-term opportunity to get long in the opposite direction. So just go back to that again. So we wick below. All right. The minute, let's say most of the risk is tagged on down here, the minute we start trading back above that, you're expecting a throwback in the opposite direction. In this case, threw back all the way to the highs. The second breakdown in and of itself is not even, that's not enough of a reason to get short. But I was getting chopped up pretty decently yesterday. It's a problem to think that things are going to happen a lot faster than they actually are. That's the best way I could put it. You see that this market, one, has an expected volatility. So I think it was like $500, for the average true range for a half-hour candle. Breakdowns don't happen. Breakdowns and breakouts don't happen and lead to immediate continuation unless there is some type of, again, usually some type of larger catalyst. More often than not, we've seen that the market likes to juke people around, right? And what that means is it likes to throw people off, fake people out. mess around with the level before ultimately continuing. This is the clean retest, right? Market breaks down, trap shorts down here, getting involved in a very hasty way, rips back up, breaks down again, and finally gives a clean retest of that level. This is the only time when really would have been, from a technical standpoint, reasonable to sell this level. And it's not even that. It's when it sells and holds, right? So moves up, that's not enough. So just that alone, but actually starts moving back down in the opposite direction. So we're seeing that the level is essentially doing its job. So right here, the market reverses from that level. And basically at that point, I should have just got involved right here and placed my invalidation back above that level, because this is the first time it's actually showing that, okay, we are accepting below, right? Meaning sellers are willing to sell this level now passively. The market couldn't get back through there, and at that point is finally being kept out of that prior daily low. It wasn't, it's not like there was a whole lot to that, but the idea was there's so many times when it seems like the breakout is imminent. I guess that's the best way to put it. Where you think like, oh, it's happening right now, and then it chops around usually. More often than not, the market chops around, returns back to the scene of the crime multiple times, and that's why it's never cut and dry. It's never easy. It's always easier in hindsight, because you get thrown off unless you have that, I guess, wherewithal to know, like, all right, so yeah, more often than not, it doesn't happen very quickly. We're at least looking. This is why TPO traders, if they're just trading purely based on old school methods, they'll use something like a half-hour confirmation, right? Half-hour candle confirmation. So in this case, your half-hour candle closed through. So that candle closed through, right? Or the prior candle closed. Even then, you always run the risk of having the market come back on you. But it's just the idea that, okay, price is finally being accepted below here. One of the reasons why I bet on essentially this moving much lower was after the break, after this breakdown, there was a good amount of development that was occurring down here. So in this level, the TPO was starting to get fat. There was no good low that was painted yet. And it was just unlikely that we went on to develop a sort of double distribution that ultimately ended up back in this range without some type of buying tail put in, some type of wick put in. It's just very much at that point obvious that if you're spending a lot of time below the structure, the market is being accepted down there, and you're probably going to move lower. So there wasn't a whole lot to it. I just wanted to, for myself personally, I wanted to look back on it and see sort of where I made a mistake. And traded too often when really there was only, there was this long. So when the market sold heavily into this pocket, there was a quick scalp opportunity. But you have to think, am I taking profit at this high, or am I taking it based on 1 to 2% move? And then there really was this clean short setup, and that was it. If we're just going by technicals and no feel. Phemex looks like it is selling again, yeah. I think that looking at a 1 minute chart for hours on end, and not just looking at it with no intent, but sitting down in front of the computer with the goal in mind of observing how the market approaches key levels, how it responds at key levels, what sweeps are, why the market sweeps certain levels. I think you could see you could get the best feedback by looking at a 1 minute chart and pairing that with some type of tape. I think that what you learn on a 1 minute chart extends all the way up. The problem when people say don't look at the 1 minute chart, it's because that's for people that are new traders that are taking higher time frame trades and then going down to the 1 minute chart. When I trade, I don't look at TradingView. I look at TradingView it's the best place to pull all, a bunch of charts together, I don't have to worry like, oh, I'm on this charting platform. Can I pull up this at? Like I know I could chart anything really on TradingView. So it allows me to go through very quickly what's happening across markets. But when I'm trading, I don't really look at TradingView. I look at a tick chart. I'll have a TradingView open, and I'll find that sometimes I'll look at the TradingView and I shouldn't even be looking at it. Like it's not really giving me much because I'm looking at basically only the tape and a tick chart at that point. So it becomes redundant. I mark out my levels on TradingView and then I'll transfer them over to the trading platform. But I'm looking at a tick chart, which is it's a volume and volatility based periodicity. It's a volume of trades, so it's not volume though in the amount that's being transacted, but it's if you're looking at a 1 minute chart, you're very close to it. But you do get a very good feel for the market. Here we go. BIFNX seller. So take a look at the CVDs now. So what has been happening all the way down, and I'm not going to say it right now and be really confident about it, but all the way down, what has been the trend? Not only the trend in price action, but the trend in order flow. The trend has been, ooh, there we go. ETH, nice. I don't think I probably got filled on a few more, but I definitely, I had a good amount up at 30, right under 33.5, 43.50, 4,350. The trend the entire way down, because you can't just be very one-sided, right? If you just continue sell, people are going to pull liquidity, right? If you're TWAPing and you're just continuously selling, you need liquidity. That's why TWAP is good in thick markets, because there's enough liquidity at the bid or the ask for it to execute and not to incur too much slippage. Otherwise, you would use some type of iceberg order. So this person's selling continuously. They have to let liquidity build up. So what we've seen the entire way down is relentless selling, pushing the market through levels, but then allowing it to recover long enough for that liquidity. And it's almost like you're thinking about the game theory behind this. Get people confident again and willing to buy. Because then, not only that, like I could also get out passively. Inspire some confidence. Buy up a little bit, right? Create the buying pressure so that the market follows you up. Create momentum, and then, meanwhile you're on the other side of on the offer, getting filled passively at that point. Right, so now liquidity builds back up. What do you start doing? Using that TWAP again to move the market back down. Or, it's not like maybe they're just trying to sell at that point. It's not like this evil intention of moving the market down. Although you could say that there is, case to be made for taking out stops, causing cascades to benefit maybe futures positions that they also hold. I don't know. I don't trade inverse head and shoulders. No, the most important things on this chart right here are this higher time frame level. You still could possibly make a higher low down here anywhere. On the low time frames, the trend is shifting. Just balance of control is slightly shifted, but we know why. So what I mean by that is low, high, low, high, low, higher low, beginning to change right here. So this is like one of the ways you look at some setups with positioning. If you're having a bunch of negative funding come into this pocket, a bunch of selling, that's not enough for me to get long on that alone. What I would want to see is that the short-term trend begins to shift against that. Okay, so something like this would be a first sign. Market is now finding support above a local high. And that offers you your short-term long opportunity back to this technical resistance. This all makes sense? I'm about to wrap it up, guys. I'm getting getting tired of streaming. How long are we into this? Hour and 36 minutes. Any other questions, guys? I'm TWAPing, yeah. Metaverse is, look where the money's going right now. If you look at, just Metaverse performance today, double-digit performance. something that I pointed out last week, Atlas, great bounce off of a very significant level. I don't want to say they're very significant, like these things are traded by central banks. But what I mean by that is just a technical level, a very obvious technical level. The kind that you don't want to get caught selling, right? So I think what you're looking at is a shift in capital, and metaverse and gaming is really going to benefit. I've talked about positions that I'm have been in, and you guys know about those, and currently in. You have things like Mist, Shroom, GameSwap, and these are lower caps, so you got to be really careful. But I kind of nakedly position in lower caps when I notice that flows are favorable for the large caps in that sector, because you have people that are looking for that next 100x. And while they're looking for it to 100x, I'm looking at it as an obvious 3x. So, I have some positions in, let's see, let's just go what I know what I have. So we'll go through my small cap positioning right now. It's at this point, some of it's not small cap, so I don't want to go over it and say, listen, I'm in position already, okay? I will eventually be taking profits. I might take profits tomorrow, so I'll just be very upfront with that. I'm a defensive trader when it comes to, and more often than not, I'm selling. Just put it this way: I'm selling early more often than not, but it's worked out for me because I basically systematically approach the market that way, where I am a little bit more doubtful of these things and hopeful because I've been around long enough to where I'm the guy constantly selling 5x's that go 20x. But then at the end of the day, I tell myself, I don't know, I'm grateful that I catch 5x's. Like, it's consistent, and that's that. Like, I can't sit and harp on the things that I missed out on. You just got to keep it moving. So I could be very well selling these positions in the next week. So we'll just say that. Chain Guardians, I'm in. I've been in this for long enough now to where I can't remember it. Getting in. What else? D-Race token, I am in. Engine, I am in. That's not a small cap. There's a couple other small caps that I'm in. These are punts. Sand, I am in. I don't think that's a small cap anymore, but I've been in that. And yeah. All right, guys, I think I'm going to wrap it up. Sol is, Sol is going to go up. That's why I think Sol is going to go over $1,000. Is it going to do that in a year, 3 years? Who knows? Trust me, guys, I'm constantly at odds with myself and my own positioning, and I hate the fact that I don't have that ability to just dump a ton of money into things and forget them for a really long period of time. I could do that with a it's probably considered a large amount of money, but I'm not deep enough into the fundamentals to be as confident as some people are. So I'm constantly selling things early. I'm constantly having a trader's mentality of things. Okay. I think that'll wrap it up, though. Message me on Twitter. But thank you guys for stopping in. If you want to check out Blockroots, it's at www.blockroots.com. And yeah, I definitely will make a concerted effort towards doing more of these consistently. Until next time, see you later.